6-member committee constituted by Supreme Court to investigate whether there was a regulatory failure in the Adani case says that the markets regulator has drawn a blank. The committee said that Sebi is, and I quote, in a chicken and egg situation in its investigation into the ownership of 13 overseas entities, including 12 foreign portfolio investors. The Securities and Exchange Board of India started its investigation into the offshore entities with holdings in Adani companies in 2020. The scrutiny intensified this year after the US short seller Hindenburg Research accused Adani of stock price manipulation and fraud. The Supreme Court has given Sebi until the middle of August, to be precise 14th of August, to complete its probe, extending a 2-month deadline it gave in March. So contrary to what many media houses and publications have reported, this is not a clean sheet to Adani. Joining me at this point in time is Amit Gupta, who is the founder of Fintrekk Capital. With me continues to be my colleague Karthik Malhotra. Karthik, we talked about this in the beginning, but it does appear from what we know and the fine prints of the committee report that we have that this is not in fact a clean sheet to Adani.
Absolutely right. And reading through the report, there are some interesting facets that emerge, which I think are going to be great discussion points going forward. Number one, like you rightly said, the panel has stated that it cannot conclude regulatory failure on part of Sebi, right? So it doesn't mean that it has even given Sebi a clean sheet. It has said that it cannot state with great authority at the moment, given the facts, that there has been regulatory failure on part of Sebi, right? But I think what is interesting in the findings is that apparently Sebi has found 13 opaque structure entities that have emerged in its preliminary investigation into Adani stocks. Now, these opaque structures are largely companies which are not transparent, and it's difficult to really come to the top of the value chain and food chain and understand who owns these companies and who are the guys who are really putting in the money. These have been made to understand are foreign portfolio investors, and these are not individual investors, right? So there are 13 such opaque structures which Sebi has tried to investigate. Apparently, there are 42 contributors in these 13 entities, contributors in way of people who fund these entities. Now, the Department of Enforcement as well as Directorate of Enforcement as well as CBDT, the Central Bureau for Direct Taxes, have tried to discover these 42 contributors and they have hit a roadblock, and hence what you stated that it's a chicken and egg situation, and a blank has been drawn on account of Sebi, which is unable to move and break through the opacity which is present in the environment right now to really arrive at who these 42 contributors to the 13 opaque companies are, right? In addition to that, there is also the panel constituted by the Supreme Court has also gone on to mention that two terms are fairly widely defined. One is related party and the other is related party transaction. So it really is urging, and this is something that it is asking for, stating as a reason for Sebi also to seek more time in investigating both the minimum public shareholding, which is 25% shareholding of a listed company should be available for public trading, and in light of this wide definition of related party transactions and related party, Sebi has asked for more time, which it has been granted till 14th of August, to really go deeper into this MPS issue and the related party issue.
That is correct. And let me quickly, because we have the fine prints of the report here, a 172 pages report. I think it's important to point out that the committee was first constituted not to look into Adani Group, but to look into regulatory failure, which means that essentially their mandate, and I'm reading from the papers that we have, was to investigate whether there has been regulatory failure in dealing with alleged contravention of laws pertaining to securities market in relation to Adani Group or other companies. So the mandate, therefore, was squarely to understand whether there has been some sort of regulatory failure.
That's right.
And let us get Amit Gupta, who's joining us at this point in time, founder of Fintrekk. Amit, from what we are understanding, the committee in its report has squarely said that the ball lies in court of Sebi now. From what we have concluded, Sebi has drawn a blank, but Sebi still has time till August 14 to come up with its own report on what happened with Adani Group, the allegations, and the allegations are squarely of minimum public shareholding, whether the norms were met there, disclosure of transactions with related parties, and stock price manipulation. Those three areas that SEBI will investigate, and the report will come up by 14th of August.
Yeah, hi Shweta and Karthik, thank you for having me. I think the broad 3 points or the key areas which the Supreme Court appointed committee were looking into, that has been covered by you briefly. I think the biggest allegation against the Adani Group has been that it has violated the minimum public shareholding norms, the MPS norms. Because there were 13 entities or 42 contributors, whichever way you want to put it out. That has been under the investigation since 2020, actually, by SEBI, that it owns substantial stakes in listed Adani companies. A violation of these norms would have proven if ultimate beneficiaries of these 13 FPIs could be in any way traced back to the promoters of Adani Group. Interestingly, SEBI actually changed the rules in 2018 that they no longer required FPIs, foreign portfolio investors, to disclose the very last natural person owning any economic interest in the FPI. What it means is that regulator cannot go behind each of these FPIs to investigate who is the ultimate beneficiary beyond the declarations which were made in the application of FPI. Now, that would save the last person from under the PMLA Act, the Prevention of Money Laundering Act, 2004. But SEBI has drawn a blank in that investigation in identifying the ultimate chain of ownerships of these 13 FPIs or 42 contributor that it was investigating, and it has found nothing. Even though it has written multiple times to various regulators overseas, especially Mauritius. But despite the change in the rules, SEBI is still investigating. And as you said, they will be giving a further report by August 14th on that. So that was the first part, the violation of the minimum public shareholding norms. The second was if there was sufficient disclosure of transactions with the related party. Again, there were some changes made by SEBI in 2021, which were applicable. Some of that was applicable from April 2022, and some has been effective from April 2023. So they were basically giving a glide path to all the FPIs to comply with these regulations of related party transactions. They've given basically time to comply with that. And SEBI has said in their report that they haven't found anything unreasonable or maybe anything out of the order, and so there is no scope of any adverse comments. Similarly, again, the stock price manipulation, they haven't found any artificial trading or wash trades to be happening between the related parties. But still, we would everybody would wait for the final go ahead by the SEBI report, which is expected to come out in August.
Amit, just wanted to understand, the report also suggests that there are 13 transactions which are under investigation right now, and on the dashboard that apparently the dashboard on Adani stocks that SEBI would be monitoring, there have been some 849 alerts that have come on the dashboard, but there is no real abusive trading pattern that has emerged as yet. So where does this sort of leave SEBI, and where does this leave the investors as a whole, where if these transactions continue to take time to be discovered, what is the recourse that SEBI could eventually take by the 14th of August?
And just to add to that, does this also mean that on price manipulation there is a clean sheet here to Adani?
So I think Shweta and Karthik, the word clean sheet would entail a lot of inferences. I would say that what SEBI has said is that given the whole network which Adani Group's companies have set up, there was no pattern of the artificial trading, that one party was buying and another party was selling. That they haven't found it. In fact, in one of the patches or one of the periods where the stock price rose very sharply, almost 80 to 100% in a very short period of time, in less than a month, the FPIs under investigation, the 13 FPIs were actually net sellers, which was very consistent with what other FPIs were also doing in the market. So far, what Sebi has given in the report, there has been no coherent pattern of abuse, and the committee which is also set up, that has also agreed to it, that there was no manipulation by Adani Group
So
through its
what
stocks
does it
or
mean? What does it mean? No pattern of artificial trading or wash trades among the same parties multiple times was found. How do we construe this? What do we make of it?
So essentially, if there is any wrongdoing, then SEBI should be coming and telling that there have been related party transactions. But as far as this is concerned, I mean, this report is concerned, so far they have not been able to identify any such patterns. So we need to, wait for the final report to see if they are able to find any other patterns.
Okay. Specifically on the point of, and this is important because specifically on the point of minimum public shareholding and related party transaction, and I know we've discussed this, in both cases, it appears that SEBI has drawn a blank, and the report states very clearly, and I'm reading from the report, that SEBI is seeking more time to effect more investigation, and this is now a matter between SEBI and the Honorable Supreme Court. On the committee itself, the committee itself restricted itself to its stated remit, which is to ascertain whether there has been a regulatory failure, and it would not be possible to return a finding of a regulatory failure, essentially saying that we cannot say a yes or a no and there is status quo. Is that right reading, Karthik?
Absolutely, it seems to be the right reading, and I think Amit, it's important at this point to also get into the stock movement we've seen on Adani stocks today, and all Adani stocks are in the green. They've all been rallying up. Some of them are hitting upper circuit as well. Is this because of the fundamental nature of the business, or do you think the report released on Friday has something to do with it?
So today's price action is more to do with the report which came out on Friday, Saturday. So yeah, I mean, it's a sentimental move. There were few shorts in the system, so there has been a strong short covering followed by long buildings in the derivatives market, especially. So I think the move is more to do with the report which came out over the weekend.
Okay. Sonam Srivastava is the founder and CEO of Right Research, also joining us on the bulletin right now. Sonam, what sort of movement have you seen on Adani stocks today?
Yeah, so I think the movement has been quite extreme. Adani Enterprises is up 18%, which is, one of the biggest moves since the Hindenburg report came in. And all the other Adani stocks are also hitting upper circuit, right? So it's been, one of the most extreme upswing days after the Hindenburg report for Adani stocks.
Okay. Suyash also joining us with me at this point in time in the studio. Suyash, good news there for shareholders?
Definitely for Adani shareholders. Adani Group stocks, the market cap has now, reclaimed that 10 lakh crore mark. So this was one of the best days for, the Adani Group stocks since the Hindenburg report came out in January 24. So I think the rally today was driven by the two Adani twins in the Nifty pack, Adani Enterprises, which was, as Sonam said, up 18%, Adani Ports, which also added about 6%, and at close Sensex was up about 0.31%, and it closed above the 61,921 mark, and Nifty reclaimed the 18,300 level. So apart from Adani Ports and Adani Enterprises, IT stocks and pharma stocks were also, contributed to today's rally. DV's Lab, Apollo Hospitals, Tech Mahindra were among the top gainers in the Nifty pack today. On the other side, auto stocks were under pressure. So Eicher Motor was the top loser in the Nifty pack. Axis Bank, financials and banking stocks were also under pressure. ICICI Bank, Axis Bank were among the top losers today. But what we need to see is that today's rally was broad-based, as the mid-cap and the small-cap segment also moved in line with the market. So the small-cap index and the mid-cap index gained about 0.5%. among sectoral indices, metals was the top gainer today. It surged about 3%. The IT index was also among the top gainers. It surged about 2%. And yeah, Bank Nifty is the one which was in an upbeat market. It fell about 0.3%. So, and Bank Nifty has been consolidating for a while now. And according to experts, it seems that the breakout on either side for Bank Nifty could trigger a fast up move or a down move. So, Sonam, how is Bank Nifty positioned currently?
Looking at banks, they look the most attractive given the economy coming back up, the growth that the banking sector is seeing, and the good numbers that are coming out of this earnings season, right? So banks are, I think, at the perfect place to rally, and Bank Nifty is also quite set up, to sustain the rally that we've been seeing. So we are at almost a year's top, and I think. Given how the market is going, there could be more legs to the rally, right?
Also coming back to the Adani Group stocks, even though Supreme Court's expert committee gave a clean chit to Sebi, Adani Group stocks have been rallying, as we were talking about, 18%. So what's driving that investor confidence in Adani Group stocks, especially enterprises, which was up 18%?
Definitely. So if if the company gets a clean chit, that's a big sentimental indicator, right? That there's not going to be a big, worry for this particular group of corporate. But what I would say is that this relief that we're seeing could be short-lived because like you guys have been discussing, there's a lot more to come on Adani. There is a deadline that SEBI has to meet. By August, and then there are certain opaque structures that they have talked about. So I think this is a short-term relief rally, and the longer implications will come as we get to know more and more about the story.
Sonam, I just want to understand from you, since you are the wizard when it comes to quant investing, unlike the traditional investing that we understand, are Adani stocks popping up on your quant dashboards also?
Adani stocks might have started popping up in terms of price trends because they have seen good trends in the last couple of months, right? That is one radar where they have come up. But if you look at the corporate governance and earning quality and those type of indicators, then those are a little bit worrisome. And especially with this news coming up, it hasn't reduced or removed the whole ambiguity, right? So I think. On the price trend, obviously we can see, and especially after today, that these stocks will come up in our radar. But we have to be very, very aware of the corporate governance issues and the longer term risks. So we have to balance these two things when you pick up these stocks.
So Sonam, in the short term, what factors should one watch out for when it comes to the market? What will be driving the markets in the next week or two?
I think we've been seeing a resurgence of momentum and the high performing factors over the last in this whole quarter, right? If you look from April to now, the best performing factors in the market are in fact momentum and alpha and stuff like that. But I think that given the global uncertainty, right, we cannot be sure that this rally is going to last forever, right, or for a very long time. We have to be very aware of what are the risks in the market. So I think still being very, very aware of the valuation and the earning numbers would make a lot of sense.
All right, Sonam, appreciate you taking your time out and joining us on the bulletin. JN Gupta was the former executive director of Sebi joining us right now. Sir, thanks very much for taking time out. I want to begin by asking a very pointed question. A lot lies now in the, with Sebi at this point in time, in Sebi's decision making. It has August 14 to complete its investigation into Adani Group. But the report and the expert committee report that we've discussed so far also asks a lot of question as to what Sebi could do, could not do. A lot of back and forth here. What's the way ahead for you looking like?
See, if you read committee's report, it has very clearly given its opinion on the various issues, and it has said that as of now, SEBI is only investigating one point, which is, or rather 2 points, which is the opaque structure and the ultimate beneficial shareholding. Even in that, they have very clearly said that as far as the law that stands today, there is no violation. Everything has been disclosed, and last beneficial, physical beneficial owner has been disclosed. So the law has been complied. But then it goes on to say that there is a suspicion, and SEBI is investigating based on suspicion. But the committee again says that investigation based on suspicion, as well as looking into the jurisdictions that are involved, it could be a journey without a destination. That is one. The secondly, they have also said that mere suspicion is not the basis of a some sort of a conviction or penalty. So these 2 points are still there, but SEBI investigation there, and we have to wait what SEBI report, if it is coming on 14th of August, what does it say?
Okay.
Mr. Gupta, I just want to come to page 16 of the report, point number 43, where the report suggests, in fact, it has stated that SEBI has also found some entities have taken short positions prior to the publication of the Hindenburg report and have profited from squaring off their positions after the price crashed upon publication of the report. So SEBI has apparently got some evidence on these short selling positions which have been taken before the report came out on the 24th of Jan, the Hindenburg research report. So if that is the case, what is holding SEBI back in really identifying, minus the limitations of the opaque structure which you stated, but to even name those entities or those individuals that have taken these short positions?
I think we are mixing the two. When I said the opaque structure and something, it was regarding the shareholding of Adani companies. That is one part. What you are talking about is the trading by certain parties prior to Hindenburg report and profiting post Hindenburg report.
Okay.
And if you have read the committee's report, it has very clearly said that since the investigation is not finalized, it will be prudent not to name the entities involved or jurisdictions involved, or the type of problem involved. So the committee, in its wisdom, has very clearly stated this. And I feel, and as an ex-SEBI person, SEBI will never release name of anybody unless until it has found solid evidence and it has passed a regulatory order. Before regulatory order, SEBI will never issue any data or any name to public. And it is prudent also because there could be situation where at the end of the investigation you may not find that something is wrong, but that person's image would still be sullied. So SEBI will never do that.
Fair enough, sir. So if we come back to the minimum public shareholding and the opaque structures which SEBI seems to have hit a wall against, now in the absence of even the Directorate of Enforcement or CBDT have being much help to SEBI's investigations, and the 2018 ruling where this opaque structure and that the fact that SEBI should have nothing to do with it was also disclosed and stated. Now, what options does SEBI have to really go and uncover these 13 entities and the 42 contributors to these 13 entities?
See, we are discussing two parts. One is the law, and other is SEBI's problem of not able to find out. So these two are separate.
Okay.
SEBI is still going after and trying to find who are the real owners or what is the structure and something. And as report says, that SEBI has probably hit the wall, but they are still trying. So that is one part. But the second part is that even what happens even if they find, unless they find the information which is contradictory to what is already in public domain, where it says that the last beneficial owner has been identified. So if they come out a situation where the last beneficial owner that has been identified is different, which comes out of a opaque structure getting untangled, and then there could be a problem. Otherwise, if they do not find something, and the third and last important point is this, that committee has very clearly stated that the law have to be implemented as they exist today or as they exist on the date. So it cannot happen a situation where SEBI would say that I create a new law and I will frame charges according to new law.
But sir, if you may allow me to come in, and I'm reading from
Please.
the expert committee report here, it says that besides in 2018, very provision dealing with opaque structure requiring an FPI to be able to disclose the natural person at the end of the chain of every economic interest was done away with. Yet in 2020, the investigation and enforcement has moved in the opposite direction, stating that the ultimate power or ultimate owner of every piece of economic interest in an FPI must be capable of being ascertained, which essentially means that Sebi has in fact gone in the opposite direction, has tried to ascertain who the natural person was at the end of the chain.
So that is what the report says, and I am repeating that. See, as of now, based on the existing law, there has been no violation, and a last beneficial owner has been established. So today, if you go to a court of law and say something, the court of law will say, look, as of now, whatever is the holding structure, it is in compliance with the law, and there is a minimum public shareholding. But then SEBI at present is investigating, and it is saying that we want to establish who are the beneficial owner in the intermediate stage also. And they are doing it. That is why the committee says that the two things are moving in an opposite direction. That law and enforcement. Enforcement is happening on the basis which is not the law today.
Okay.
That is what committee
So as a
has very
former
clearly
SEBI
said.
person, are you saying that the regulator here is moving in the opposite direction to what the law states?
Whatever I am saying here is not saying as a former SEBI person or a SEBI thing, as an individual, and I am interpreting the report. I am not giving my opinion on the subject.
Okay.
I am saying if you read the report clearly says this. What is my opinion is different.
What is your opinion, sir? Because I'm going to quote another important aspect of the report, and it says that the securities market regulator suspects wrongdoing, but also finds compliance with various stipulation in attendant regulation. Therefore, record reveals a chicken and egg situation. What do you make of these lines?
So that is what I am precisely saying. That look at the situation where, and I would say, again go back to the report. Report concludes that as of now there is no violation. Now, and you have seen various news items that is appearing in the newspaper, social media, we are saying that the Toothless Committee has given a report. Now, when people criticize even a committee of this type saying it is toothless, what do you expect? So a regulator has to satisfy all constituents. Now, in order to satisfy all its constituents, it is going beyond that. Although establishing that it is compliant with the law, it wants to say that I want to get a further investigation and satisfy myself that even within the intermediate stage, whether it is violation or not, it is beside the point whether that would be established in the court of law and penalized or not. That is beside the point. But SEBI is being extra cautious, going extra mile to satisfy the constituency that yes, there is nothing wrong and we are doing our job.
Okay. All right, Mr. Gupta, that is an important story. We have the report fine prints here with us. We will, of course, continue to break them down, come up with what lies in the fine print as opposed to what media is reporting on the surface of it. Thanks very much for taking time out.